Shares of Reliance Industries have corrected nearly 20% from hitting their lifetime high. Shares of Reliance Industries have corrected approximately 20% after hitting their lifetime high. But one has to also remember the stellar rally that we had seen from the March lows for the stock. It had more than doubled for itself and at one point in time had also become India's first $200 billion company by market capitalization. But with the rise, what happened was that the weightage of Reliance Industries in the Nifty itself surged to more than 10%. And that's the reason most of the mutual funds that were holding on to Reliance Industries stock had to sell some bit of it in the schemes, particularly where the exposure had run up more than 10% to comply with the SEBI regulation. In that case, what we saw was the September shareholding pattern clearly showed that there had been some bit of selling by the domestic institutions. Mutual funds, if you have a look at the September shareholding pattern, had about 5.12% as compared to 5.44% stake in the company, which is a reduction of about 6% in what they were actually holding in the previous quarter. Similar was the case for domestic institution LIC that reduced its stake to 5.7% as compared to 5.94%. While these domestic institutions were the sellers, there were foreign institutional investors that were waiting to lap up shares of Reliance Industries, who increased their exposure to 25.2% as compared to 24.72%. Who also bought in were the retail investors, during the rally that we had for Reliance Industries. The individuals who held share capital less than 2 lakhs, they increased their stake to 7.69% as compared to 7.48%. But moving on to some of the other factors that have been contributing and impacting the share performance of Reliance Industries, the very fact that it has now corrected about 20% from its 52-week high and has also come to the previous breakout region, which was very close to the 1800 mark. If you have a look at the key moving averages, it trades well below the short-term moving average of 50-day as well as 100-day, while the 200-day moving average, which is the long-term moving average which investors look at, that is still about 12% below the current market price. But one interesting data point that I want to highlight for you, is the fact that Reliance Industries had underperformed the Nifty for 10 weeks in a row. And if you had a look at the analyst corner, it would definitely suggest that this would be a good time to accumulate shares for the longer term, because 70% of the analysts who track the stock have a buy rating. Hold rating is by 20%, and 11% of the analysts have a sell rating on the stock. The overall target price pegged for Reliance Industries offers a return potential of nearly 13% over the next 1 year or so. Also, we had a chat with Nooresh Merani, the technical analyst, and he believes that, after the long run up that we've had in Reliance Industries, the stock has now hit a pause button. While the long-term chart still remains intact and on the positive side, he believes that the short-term underperformance could continue for some time going forward.